Good morning, winners. Welcome to Terry's Tips. So listen, so many of my clients, my audience, the people on my social media are investors or looking to be investors or looking to buy their first home. And so, my channel is focused heavily on, entrepreneurship and leveraging your credit and building wealth. So in today's video, we're going to talk about real estate financing options. Yes, guys, because do not let the money, do not let the financing be the thing that keeps you from building wealth. And I mean it, because there's literally a ton of different ways to invest in real estate and a ton of different ways to finance it. So we're going to outline it. And so if you didn't even think about being a real estate investor and you stumbled on this video, you stumbled on it for a reason. Get a notepad, get a pen, okay? And for everybody who is new, welcome. My name is Terry. I am a self-employed entrepreneur, investor, single mother of 3, and every Tuesday and Thursday morning I upload free tips about personal and business credit, real estate investing in general, financial literacy, and the goal is to break generational cycles of poverty and build wealth and build legacy. So I would love for you to subscribe, like, share, hit that notification button so you can know when I upload a new video. So let's jump right in. I'll do my nugget at the end. So first, guys, so many people come to me and I say, okay, let's talk about your goals. And they say, I want to be a real estate investor. Great. Listen, that says absolutely nothing. The real estate world, the real estate kind of realm is huge, guys. So I need you to really think about what is your goal and what type of investor you want to be. Write that down. What is my goal? Like, do you want passive income? Are you just trying to get, some extra, a couple of extra $100 a month? Are you trying to build a big real estate portfolio? Do you want lump sums of money? Is there an immediate need? How fast are you trying to build? What type of investor do you want to be? And what is the goal? So let me give you an example, because I literally, when I tell you I love real estate, one of the reasons why I love real estate is because there's so many things you can do with it. Whether you're a wholesaler, whether you're a fix and flip, whether you do a buy and hold, whether you do Airbnb, whether you're a Section 8 landlord. Let's say you buy properties near colleges and you do off-campus housing, or you sell rooms. Like literally, whether you do tax evasions, foreclosures, share sales, estate sales. There is a million things you can do with real estate. And of course, live in it, okay? If you're buying your very first home, you are still in the real estate space. Guys, I am a part of Make Real Estate Real, and Jemal is one of my mentors. One of the things he says is that you're in real estate whether you know it or not. You're just either paying somebody to live in or like you're a tenant, or you're an owner. You're either paying for your mortgage, or you're an investor, or you have tenants in your property. So you're the one that's going to decide what end of real estate and what side you're actually on. So I want you, and honestly, guys, literally, I know people that invest in real estate that they just do wholesaling, and that's it. And that is all they do, and they make tons of money. That they just do share sales, they just do foreclosures, they just do fix and flips, they just do buy and holds. What I would encourage you, and the reason why I'm doing this video is because there's different income requirements, different debt requirements, different credit strategies, different financing available for all of the different strategies. So this is why, if you are a new real estate investor, a seasoned real estate investor that's made some mistakes or wants to scale up, if you're thinking about being a first-time home buyer, this video is for you, because you need to define what type of kind of investor you want to be, especially for the very first project or the very first two that you can kind of transition. And I always tell people, be laser focused, learn that strategy and master it, and that's how you make your money. If you're doing a little bit of everything and you're kind of mediocre at everything, guys, that's how not only you can lose time, but you can lose a ton of money and you can make a lot of mistakes. So we're trying to avoid you making mistakes. If you flip, master flipping, flip all day long and make your money. If you are a buy and hold, you stay in your lane and you buy and hold and you look at those strategies. Look, got it good. That was a big nugget right there. I need you guys to think about the goal, think about the actual financing. So let me jump into a bunch of ways that you can finance your real estate. Okay, and first let me also say that real estate is also, like, you could be a first-time home buyer, or you could be an investor as well, or it can be commercial, right? Still a bunch of different ways. So first, obviously, is cash, right? So if you are a cash buyer, if you have cash on hand, then yes, you can bid on properties, you can go to auctions, you can go to sheriff sales, you can buy properties low. One thing I would encourage you though, is let's say you have $100,000 in cash. You had an inheritance, you had an insurance claim, you saved it up, you had, 401k, whatever it is. Always be thinking about making your money work for you. Write that down. How can you grow your money? Cash is great. Cash is king, but leverage, credit, other financing is available for a reason. Do you want to spend $100,000 on one property? I need you guys to hear me. Or maybe $10,000 for 10 down payments for 10 properties. I'm going to leave that right there. And I hear people say cash is king, and it is, but there's a reason why there's so many different financing options, because true savvy investors understand keeping their capital and leveraging and using it for some of it, but not all of it. Amen? All right. And so the next thing is banks. Guys, there's pros and cons to all real estate financing. This is why I said it's specific to you. And so for banks, some of the pros are that, it's really low rates and lower down payments sometimes. Some of the cons are that, it could be like really strict with the financials and you have to have good credit and it's very, very regulated. And so this is where even for banks, guys, and sometimes the banks hadn't always traditionally been super like investor friendly. Now a lot of the banks are transitioning into more investor products. But this is where even like an FHA loan or a VA loan or a USDA loan, or like for first time home buyers, that can be like a 640 credit score and only 3 to 3.5% down. Did you hear me? 640 credit score and about 3% down. So that's where the game changer is the low money down, especially for my investors. That's where they can have $50,000 and get a couple of different properties. With FHA, if you are a first-time home buyer, depending on if you're a first-time home buyer, that means that the property will be in your name, in your social, owner occupied. You get those low down payments, you get those low fees, you get all these grants and first-time home buyer programs, because those products are literally meant to help the average person become a homeowner. They are not meant to help you investors become rich. That's why in Make Real Estate Real, and guys, if you have not become a member of Make Real Estate Real, I highly recommend it. It's Jemal King, the 9 to 5 Millionaire. It's an online course that we have, and it walks you through everything in real estate financing from beginning to end, from the strategy, from the structure, from the financing, from the accountant, the lawyer, the project manager, the brokers, the credit, everything. And we kind of give you everything you need to be successful. That's another tip, guys. Do your research. So many people just want to jump in because it looks so glamorous on social media and so forth, but understand that you grow through this process, okay? There's going to be ups and downs, and this is why you want to be educated. Don't let everybody else be educated and you're the one with the money. You're the actual investor. You know nothing about the process. You want to be an advocate for yourself and you want to be involved in the process. That's a nugget. Take some time to get educated so you can be successful. Invest in you. Amen. So Make Real Estate Real. I'll put the link. The link is in my link tree. If you haven't actually become a member, I highly recommend it. Okay. And so the banks. Now, this is where also we teach you guys house hacking. That's one of the things we teach in Make Real Estate Real as well. And I did a whole video on there. I'll link it to here, where you can use an FHA loan. And let's say you get approved for $300,000. You can then use that $300,000 for a single family home, a duplex, or a triplex. Right? And so this is where you can be savvy and get a duplex and live in one unit and rent out one, or live in a triplex and live in one unit and rent out two. Sometimes the banks won't let you get like quads, which is 4 and above, but definitely a single family, a duplex, or a triplex. Okay. That's FHA financing. You also have like with commercial credit, with conventional, with 203K construction loans. This all falls under banks. With the 203K construction loans, that's where a traditional lender, a bank, an institution will actually give you the money to purchase a property and to renovate it. Okay. And a lot of times you need a higher credit score and you might only need like 10 to 20% down. So this is where this is a way to leverage, right? And so you can get like a 15-year mortgage, you can get like a 30-year mortgage, but there are pros and cons. Some people, guys, don't have a lot of money, but they have good credit. That may be an option for you. But if you have not really great credit, but a whole lot of money, we're going to talk about the next thing, which is hard money. Yes. So listen, we love our hard money lenders. Now, yes, pros and cons. Some of the pros are they're much more flexible. Some of the pros are they are investor friendly. Some of the pros are they're short-term loans, 6 to 13 months. Some of the pros are, that they can get sometimes a higher loan to value because they're looking at the ARV, the after repair value. So they're focusing a lot on the actual project, not necessarily as much on you. Now, do they have guidelines? Absolutely. And honestly, as far as credit wise, what hard money lenders will accept is going to vary. Okay, so hard money lenders are not regulated the same way. And so they kind of have their own regulations about what they'll approve. So this is where you ask questions. Now, some of the downside to hard money is the down payment. It costs a lot more money. So they may want between 20 and 40% down, okay? And so they can have higher fees and higher, interest rates and so forth, but it's a short-term loan. This is why we teach people, and you should educate yourself about after repair value and finding a good project. A good project will always sell to somebody. I promise you, okay? So hard money. We love our hard money investors. They allow us to move quickly. And like I said, even though it's a lot of fees, because of the after repair value, you can make a ton of money. A lot of times flippers, people who are flipping properties, buying them, renovating them, and selling them, use hard money, and they are definitely an option. But if you hardly have no capital, that's going to be a barrier for you. You're going to need to actually learn how to get some capital. That's why we teach you guys wholesaling too, which is where you don't necessarily own a property, but you're putting together a buyer and a seller, and then you're making a commission off the deal. So let's say you put together a buyer and you put together a seller, and you put them together and they do a deal, and you get 10,000 commission. Well, if you need $50,000 for your hard money loan and you do 10 wholesaling deals at $10,000, you got your money, right? And as far as like getting down payment money, guys, this is another tip. It can be savings. It can be wholesaling. It could be 401k withdrawal. It could be stocks, bonds. It could be gift money. It could be income tax refund money. Do not let the money be the reason why you don't invest in real estate. There's a bunch of different things to do. The next thing brings me to private investors. Guys, it may seem super foreign if you're not like in the real estate space, but private investors are definitely an option. And guys, a private investor could be an equity partner or a debt partner. And so if they're a debt partner, that's like a private investor is giving you like a loan, you pay them back. If you're like an equity partner, that almost means like they're going to be a partner in the deal. So they're looking at some type of return, right? The best thing I can say to you, because private investors could be family, friends, mentors, somebody in your network. Sometimes it can be hard to find if you're not in that space, but it is not uncommon to have private investors, right? The biggest thing, a couple of tips, is always be transparent, right? Because you're dealing with a private person about the structure, the payout, and all those things. And always pay your hard money. Well, always pay your private lender first. When the deal gets done, you pay your private investor, period. And then you pay yourself and everybody else. Take care of your private investors, and then they will be your friend for life, okay? The next thing is like alternative financing, I'm going to call it. I'm going to lump a couple of things in here. This is like joint ventures, credit partners, crowdfunding, like there's a bunch of even like mortgage assumptions. So a joint venture, what that means is that maybe you have good credit and maybe your friend has, a lot of money but bad credit, and you guys form an LLC or an S corp or whatever it is. It doesn't really matter, and you guys are purchasing a property. And basically, both of you guys have a strength, a weakness and a strength, but together you guys are able to qualify for whatever financing that you need. So joint ventures, you partnering with somebody to buy real estate. Credit partner, and this works with like business credit. This also works with hard money lenders, where again, you have like a business entity, you have some kind of partnership, and maybe you're the brains, you found the project, you did the numbers, you have the credit, like you have done all the work, but this other person has the good credit to actually get you the financing. So for business credit and for like hard money lenders, they will do a project and actually evaluate and approve a hard credit partner for your deal. Crowdfunding. What that basically means is that you're raising a large amount of money through like small increments through a bunch of people. And guys, there's crowdfunding websites. There's people that specialize in crowdfunding. Like almost think of it like a GoFundMe, where like you need $20,000 for your real estate deal, and then you're getting a bunch of people to like invest a small amount of money. Guys, crowdfund your family, crowdfund your sorority or your fraternity. Like you can be creative. Do not let how bad do you want it? The money is out here. You just have to get it. And even like assumptions. So say somebody has a deal and they're about, like, they lost their job, they're about to lose their property, but they don't want a foreclosure on their credit report or whatever. Sometimes you can do even like if somebody passes away, but they have a mortgage and you want to keep the property. Guys, when you have an option to keep a property, keep it. Seriously, there is somebody out there who wants it for something. And so this is where like a mortgage assumptions, meaning like you're almost like going to that lender and you're assuming the mortgage. And so now the property is now in your name. You can get it deeded over to you. And then the last one, guys, is business credit. Yes, so you know I talk a ton about business credit, and you may not get a $300,000 mortgage in business credit, no. But what you may get is a $100,000 line of credit that you can use to buy multiple properties, or high limit credit cards, or business loans. You know, there's all kinds of things. You can use that money then as down payment money to pay contractors, to pay investors, to do the rehabs. Like there's a whole bunch of things you can do. Maybe you got a hard money loan with your capital, and you're going to use your business credit as the payouts to the hard money lender while they're renovating the property until you sell it. A ton of different ways, guys. So I outlined cash, I outlined banks, I outlined alternative funding, I outlined hard money lenders, I outlined what was the last one? Oh, private investors. I gave you 5 different ways. Oh, and business credit. I gave you a bunch of different ways, a snapshot of how you can finance your real estate deals. There's no reason why you can't do it. Amen. One of those options matches you. Now you go match it up to your credit, your income, your assets, and your goals. All right. I hope that was helpful. And my nugget for today, nugget. One thing that one of my mentors told me, and I really held on to this, and baby, when I tell you it's so true now, people are celebrated in public for what they do in private. Let me say it again. People are celebrated in the public for what they do privately. That means you see somebody who's wildly successful. They're a multi-millionaire. You know, they're a self-employed entrepreneur. But what you don't see is all the times they hit rock bottom. What you don't see is that they filed bankruptcy because their first 3 businesses failed. What you don't see is, you know, the time that they sacrificed. You know, I put up the post about, you know, the car I have down through business credit, and when I had gotten a 2005 Ford Explorer and drove that for several years to build my business. So understand that nobody is an overnight success. The people that you see really having success now, they have grinded for years. So I want you to put that into perspective. Stop thinking that you're going to be a real estate investor, self-employed, you know, entrepreneur, you know, whatever it is, and that immediately you're going to have, like, you're going to be a multi-millionaire. No, work at it, okay? And the people you're seeing now have been in it 10 and 20 years. I promise you, okay? And so I hope that that was helpful. I told you why you need to know what kind of investor you need to be. I talked about different types of things you can do with real estate. I gave you options for financing your real estate, and I gave you a nugget that will help you along your way. Have an amazing day.